Welcome to FXtech's weekly analysis of the pound sterling to US dollar currency pair. Today we'll examine the British pound against the US dollar for September 22nd to 27th, 2025. Our comprehensive analysis draws from 5 leading financial platforms: TradingView, investingLive, ActionForex, Forex.com, and DailyForex. Let's explore the key market movements and trading opportunities ahead. Looking at our market overview, pound sterling to US dollar closed at 1.3460, down 0.26% for the week. The pair traded within a range of 1.3350 to 1.3520, showing increased volatility following central bank decisions. Technical indicators point to emerging bearish momentum with RSI at 42.5 and MACD turning negative. The price sits between key moving averages, suggesting a potential trend shift as bearish pressure builds. 3 major events dominated pound sterling to US dollar this week. First, the Federal Reserve delivered a hawkish 25 BP rate cut, emphasizing data-dependent future cuts. Second, the Bank of England held rates at 4.25% with a divided 6-3 vote, revealing growing economic concerns. Finally, UK data showed mixed signals with retail sales declining by 0.4% but services PMI improving to 52.3. These conflicting indicators created market uncertainty but generally favored USD strength. Our technical analysis reveals a descending triangle pattern forming on the daily chart. Key resistance levels are at 1.3500, 1.3550, and 1.3600, while support levels sit at 1.3450, 1.3400, and 1.3350. The consensus across platforms leans bearish, with TradingView and ActionForex issuing sell signals. Price is testing the 38.2% Fibonacci retracement level at 1.3450, with momentum indicators confirming the short-term downtrend within a broader medium-term uptrend. For the next 1 to 2 weeks, we project a bearish bias with 65% probability. Pound sterling to US dollar should trade within the 1.3300 to 1.3500 range. Our recommended strategy: sell on rallies near 1.3500 resistance, with stops above 1.3550 and targets at 1.3350, potentially extending to 1.3300. The trigger for this setup would be a break below 1.3450 with increased volume. Watch for upcoming UK GDP and US PCE inflation data as potential market movers. Looking 1 to 3 months ahead, we've identified 3 scenarios. The bearish case, 60% probability, sees pound sterling to US dollar breaking below 1.3350 and targeting 1.3200 to 1.3000, driven by monetary policy divergence. The neutral scenario, 25%, would keep the pair range-bound between 1.3300 to 1.3550. The bullish scenario, 15%, requires significant UK economic improvement to push toward 1.3700 to 1.3850. The Fed-BOE policy gap remains the primary driver for medium-term direction. Key upside risks include a dovish Fed pivot, hawkish surprise, or UK economic outperformance. Downside risks involve persistent US inflation, accelerated rate cuts, or global risk aversion. For successful trading, limit position size to 2% of capital and target a minimum 1 to 2 risk-reward ratio. In conclusion, pound sterling to US dollar shows a bearish bias in both timeframes, with a 60 to 65% probability of moving lower toward 1.3200 to 1.3000 over the next 1 to 3 months.